So today we will teach this chapter 8 of financial statements 1. It is in the book of accountancy 2. So financial statements 1 chapter 8 we are discussing. Financial statement we will cover trading account, profit and loss account and balance sheet. Okay. All these together, these are also known as final accounts. Final accounts. These are also known as the final accounts. So here trading account, profit and loss and balance sheet, three things we are going to discuss. In trading account, we cover all the revenue expenses. Revenue items, all the revenue items, it may be expenses or earnings. Revenue earnings means any income or expenditure that relates for one accounting year or financial year, one accounting year or normally it is of 12 months also we say it is one accounting year. And these are of recurring nature. Recurring nature means every year you have to do. Recurring. Their nature is of recurring nature. Okay. These are the trading account and PL account. PL account, it also covers only revenue nature of transactions, revenue expenditure and revenue earnings, and one accounting year, and they are of recurring nature. This applies to both trading account and PL account. Okay, but for balance sheet, we cover capital accounts only. Capital accounts, capital nature. Revenue nature not here, capital nature. Capital nature means not one accounting year, more than one. So it will be more than 12 months, more than one accounting year. Okay. And these are not of recurring nature, non-recurring nature. Non-recurring nature. So what are non-recurring nature? Means any expenditures. Recurring nature means it fixed assets, it can be fixed assets. When anything whose benefit we are going to earn for benefit, recurring nature means benefit to the business for more than 12 months, for increase earning capacity like machine and all that. Earning capacity, it increases earning capacity. These are of the benefit of capital nature. Increase earning capacity, like I was writing, fixed assets, all fixed assets it can be. And non-recurring nature, more than one accounting year, of course, whatever we are expenditures for more than 1 year, for more than one accounting year. Like your with advertisement expenses, one item comes in mind, advertisement expenses. Suppose heavy advertisement expenses. For this heavy advertisement expenses, now I will rub the upper side so that here I can write. So heavy advertisement expenses, they are, suppose advertisement expenses I have made and its benefit will be for 3 or 4 years. 4 years benefits will come. So what we will do for the current year means more within 1 year, that is for this this accounting year, current year means this accounting year, we will show in PL, and rest for 3 years. 3 years where it will go? It will go to balance sheet as deferred. Deferred, DEFFED, deferred revenue, deferred advertisement expenses. Advertisement expenses. Deferred means the expenses which we are not incurring in this current year, it is deferred to the next year. So one fourth will come here, and 3/4 will go in the balance sheet. This is the outlook of balance sheet, trial balance, PL account, trading account. Now we will go to practical questions, numerical questions, so that you can understand this very well. And another word comes for balance sheet, that is marshalling. Marshalling of items, or marshalling means grouping. Grouping means in the balance sheet we should group items of one nature in one place, so that the balance sheet, actually the objective, what is the objective? Objective of this financial statement is to show the correct picture, to show the true and correct position of business, position of the business, and performance of the business, and performance of the business It is its main objective. So true and correct position. So what we do marshalling in the balance sheet and group the items, like fixed assets item in one place, current assets in one place, likewise all capital related items in one place. So in this way it is called the marshalling of the. Now we will go to example number 2, question number 2. Question number 2. In the question number 2, you are given some figures and asked to cost of goods available for sale, cost of goods sold during the year, and the gross profit. Okay, so part A we are going to do cost of goods available for sale. Goods available for sale. Goods available for sale. Goods available for sale. Goods available for sale starts with first opening stock. Opening stock, whatever the opening stock you have, that you will write here. Then after opening stock, or we will fill the figures also. Opening stock 25,000. Okay, opening stock. Then the second item is of purchase plus purchase. Purchase here is given of two types, on cash and credit. Both type of you have to take. Cash 7,50,000, and 3 lakhs. Okay. So this comes to your 7, 3, 10 and 50 lakhs. Minus return, whatever you have purchased returns. Whatever purchase you have returned, that will not be available for the, because goods you have returned. So goods return is 50,000. Purchase return is of 10,000. Purchase it, so it is 10, 40, 1, 2, 3. Then after this, but these items are, and okay. Now from this, these items we will less. These are purchased less. What less we will, here these we add, and less sales. Available for sale. So available for sale, this is goods available sold means opening stock, add purchases and return, and this is your 10,65,000 is goods available for sale. Okay, this is one answer. Then goods, cost of goods sold during the year. Now its cost they want to know. Cost of goods sold means cost of goods sold. Second point is cost of goods sold. Cost of goods sold you have to calculate. So cost of goods sold we can calculate from this. If you less closing stock. Closing stock means the stock which was not sold. So it was not sold, so it should not come here. So from this we will reduce. Your closing stock is 30,000. So this 30,000 we will reduce. So 2, 5, 3, 3, 5, 10, 3, 5. So this is one answer, and this is your second answer. Okay, 1135. Now they want gross profit also. So to calculate the gross profit, third part is gross profit. So to gross profit we have to prepare a trading account. From the trading account we can calculate. Okay. So trading, it is account. So it is the debit side, it is the credit side. Here only 3 items comes. One is sales and other is closing stock. So closing stock is 30,000. 30,000 will be written here. And sales less return. So 3 items: sales, less return, and closing stock. Only 3 items comes here. So in this question, sales are of 2 types: cash and credit. All type you take, and credit. Cash sells 12 lakhs. And credit cash sell 4,000. It is 4,000. This is 4 lakhs and this is 12 lakhs. So altogether 16 lakhs is here. Less returns, whatever sales come back, returns. So that will not be a part of the sales. Sales return is 50,000. So outer column will be 15 lakhs and 50,000, and total will be 15,000, 15 lakhs 80,000. Here only 3 items come: sales, returns, and closing stock. Only 3 items. 3 items. Here in this side, credit side, you remember it, and it is the credit side. So all the items you have to write by word you have to use, because it is the account, and in account we use by this side and to this side. So this side what will come? This side will come first opening stock. This you learn, keep in mind always. In opening stock, second is to purchase less return. Purchase are here 10,50,000 you have calculated. So you write cash and credit. Cash and credit you write 750 and 3 lakhs. It is 10,50,000 less returns. So less return is 10,000. So outer column it will go. Here is the outer column. It is known as the outer column. Here one, that is the amount column. It is amount column. Like ledger we are maintaining accounts. So it is particulars and this is amount. So here 10 lakhs 40,000. It is the outer column, amounts column. It is amount. Here particulars are there. So likewise it will come here. So other items here we add all the direct expenses. This side I am going to wipe off. Okay. So here we will write all the direct expenses. So what are the direct expenses? This also you remember, direct expenses. Direct expenses means expenses for manufacturing any item, for manufacturing. Second, purchases, net purchases net you have to do, means the return you have to reduce, anything lost by fire or any goods taken by the owner. So whatever is available in business for sale purpose. And third is expenses for bringing goods up to stage of sale, stage of sales. Okay, so here any expenses, suppose carriage is there. Okay, so in this question wages are there. Wages are direct expense. Wages and salary is direct. Wages and salary, if written, it will be salary, it is a direct expense. But if you write salary and wages, it is not wages, it is not a direct expenses, it goes to PL account. Be very careful. If salary word is first, it will go to PL. If wages word is first, it will go to trading account. So here wages is given, so wages we will write here. Okay, wages we will write here. Just for sake, I told you. Wages 1 lakh. Wages 1 lakh. Okay, sir. And here salary is there, so salary will not come. Salary will go to PL account. So this portion is over. Now this side total is higher. So this total comes always this side. If it is a profit earning business, then to GP, gross profit, carried down. It carried down means it comes to PL account. Yeah, carried GP transferred to P&L account. Okay, so PL account we will discuss later. So 0 4 4 8 1 4 5 and so here whatever is the difference figure, this is difference figure. But you need not write difference figure, you will write to gross profit transferred to PL account. Okay, this difference you will write, but it is a difference figure, balancing figure, difference figure, whatever you want to say. And this is your total side is higher. So in the question, your third answer is, this is C point answer. Okay, now we will go to the third question by the time I am wrapping it off. Now question number 3. In the third question, they want gross profit and operating profit. They want GP and gross profit and operating profit. Gross profit and operating profit also they want. Operating profit. Operating profit and non-operating. So operating profit means all expenses and all incomes related to business only. Like dividend will not come, dividend, bank interest, because these are not your direct not related to the business. So investment, interest on investment, any commission out of the business, commission, rent, suppose rent you are receiving. So these are whatever the expenses which are not related to business, only related to business will come. And non-operating profit, okay. Non-operating profit, these incomes are extra incomes are also included. So that will I discuss in the next question, sir. So here we will find GP and operating profit. So first for GP we will always go for trading account. Okay. So for GP we are going to make a trading account. And it is at a particular date, as on a date. Means it is not for the a trading account. Trading account or PL account, these are for the year ending. That's why they show the position they show the performance. Okay, and balance sheet, that is as on date, particular date. So this shows the position. These are the main objective of your final account. So when we will discuss trading and PL account for the year ending, so we will know the performance of our business, and balance sheet. In the balance sheet, it will be of a particular date that shows our position, what is our position. So we are going to prepare the trading account here for the year ending. Whatever the year they will give, we will write here. Okay, every question you have to write. 31st March 2017. Okay, so trading account, again it will be like this. Here only 3 items come: sales, less return, and closing stock. Here always only 3 items will come. So here net sales they have given. So net sale, if sales net, if it is net, returns will not come. Okay, so net sales 11 lakhs. And closing stock is your 70,000. You can make a total here because other items will not come here. Here comes only 3 items. It is net, so returns are less. Return is not there because it is net sale. Okay, here opening stock always you will start, and buy word you write buy because it is a account, trading account. To opening stock. So to opening stock, what we will write? Opening stock is 50,000. To purchase, here again purchase is net. So you need not to make any adjustments here like returns and all that. And 6 lakhs you are writing here. Okay, 6 you have writing. Direct expenses you have to write. Direct expenses you will write here. So direct expenses is 60,000. Indirect expenses we will not. Administrative expenses, that is office expenses, those are not directly related with the trading account, because trading account 3 conditions are there: up for manufacturing, purchases, and for expenses to bring that purchase in up to the stage of sales only. After sales, this office and all that, these are not related for making purchase items up to the position of sale. Okay. Loss due to fire, when it is net figure is given, it means loss due to fire, returns, everything is adjusted, so that you need not to make loss to fire. Otherwise purchase, then returns, then loss by fire, goods taken by owner, given in gifts, donation. Okay, so these items are not covered when net item is given. So these already net is there. Okay, selling and will not bust. So we will make the to GP transfer to capital account. You write full 1170. So what will be the answer? 0 11 11 6 17 का 7 हाथ में आया है 7 7 और 4 11. Okay, so this is your one answer. So what answer? Gross profit, one answer. This is your answer 1. Now they want operating profits also. operating profit means to run the business. So all other items also, this gross profit, now what we will do, because it is trading and PL account, because operating and PL account, because here itself we are making the operating profits. So 2GP carried down by GP brought down. So 4,60,000. Only non-operating expenses like dividend, interest on investment, bank interest, these are non-operating. So this will not come. Other all incomes will come, and expenses also we have. So expenses is your admin expenses, means office expenses, admin expenses, administrative expenses. Administrative 45,000. Okay, and selling and distribution, to selling and distribution expenses, selling and display 65,000. And loss by fire we have, because it is net is given, so all is covered in that. Loss due to fire, you need not to worry, it has already gone there. And keep this in mind also. So your now it will come to your operating profit, because other non-operating items are not here, non-operating expenses are also not here, so it is only operating. So 460 is the total, so 460 will come here, and here plus 0 3,50,000. So this is your 3,50,000. This is your answer number 2. So this question number 3 is now, question number 3 is now over. Now we will go to question number 4. So here in the fourth question you have to find net profit, and given the operating profit, like in the previous question you have calculated operating profit. So from operating profit, so your operating profit was on this side, it will come to this side. By PL still we are continuing. By operating profit, here it is given 17 lakhs. Okay, and non-operating expenses, here it will come non-operating expenses. So non-operating expenses were 1,50,000. Okay, and sorry, it is income, non-operating income. So by non-operating incomes like interest, etc., what I told you, 1,50,000, and non-operating expenses 3,75,000. So now it will come to net profit. After operating profits, if we had non-operating expenses and non-operating incomes, the net becomes your net profit. Okay, net profit, and this net profit is transferred to where? Capital account. This net profit is always transferred to this. So 1850 lakhs. So 1850 will come here, and the difference is 375 it is. So this is your answer. Now we will go to the fifth question. I will rub it, and fifth question we will try where we have to make only general entries. Okay, in the fifth question we are trying. In the fifth question, they have given some figures of the trial balance, and you have to make first you have to record is the journal entries. So whatever is given in the PL, which side it is given, you have to make a debit. In the trial balance, whatever is given, the opposite sides of entry we will given. Like opening stock is given in debit, so we have to make opening stock as credit. So what we have to write? We have to write opening stock, so that this amount will go off from the trial balance. Opening stock is in debit side, we have written to in. This is the way. So if anywhere you want to make a general entry, you keep this in mind. Whatever items are there, you want to make it off from the trial balance. Purchase in so to purchase we will write to purchase account. So it will go out at trading account debit. Trading account debit, of course. Trading account, because it goes in the trading account to and what will come? 8,10,000. So whatever item from the trial balance we are pushing out, so these we have written debit items, we have made a credit. And whatever is the credit item we will write here in another also. So credit item we will make a debit. So sales is given, sales account, debit we will write 10 lakhs. Okay, so here 8 and 10 lakhs, 10,000. And one item is not given in the trial balance, it is given out of the trial balance, closing stock. So whatever items not in the trial balance, whose its entry, what you remember in the trading account, here in this side we write closing stock. Means this is buy. So buy closing stock, buy means debit closing stock, here we are writing. So again we will write closing stock, this you remember, closing stock. Account debit only two entries, one is sales and one is closing stock. One entry is of sales and one is of closing stock in the credit side. So both the entries comes by buy, so we will make it a debit. So debit sales account, closing account also debit. Closing account is debit by 3 lakhs. And if where it will go to the credit side of trading account, to trading account. Means it goes to the credit side. 10 lakhs, 13 lakhs. Okay, this is your journal entry portion is over. Now the second part is show how the above items will appear in the trading account and balance trading account, PL account and balance sheet. So trading account, how it will come? So trading account, let us make. So trading account, it will come sales, buy sales and buy closing stock. So 10 lakhs and your 3 lakhs. All total 13 lakhs. Trading at PL account. Okay. And here 2 opening stock and 2 purchase. So it is 2 lakhs, 8 lakhs, 10,000. Other no items are there. So we will make a total 2 gross profit. 2 gross profit transfer carried down. Okay, and here itself is PL account, because in the heading we have got trading and PL account. So for the year ending, it is for the full year. So by GP brought down. So 13 lakhs will come here, and the difference is 2,90,000. Here in PL no other expenses is there, so we will write to NP transfer to capital account. Okay, capital account 2,90,000, and this part is your over 2,90,000. So this will go to the balance sheet. Okay, so this journal entry portion I am wiping it off, and the balance sheet I am going to write here. So okay, in a very short time. So balance sheet. Here balance sheet, the items given only this closing stock item, because this also closing stock already we have done the journal entry. So in the balance sheet. So balance sheet, how this closing stock is your asset. You have written the journal entry, trading account, closing stock, debit to trading account. So when you write anything as a debit, it creates assets. Assets or expenses. But here closing stock is and assets closing, because it is asset. So it comes here closing stock. closing stock is here 3 lakhs. And other items not given, so only one item will come here. And here also other capital and all that are not there, so only NP we are writing, otherwise capital and plus NP etc. we write. So NP only we will be writing 2,90,000. So this is the position of the balance sheet. Other there is no need to, these two items will come here like this. Okay, by this portion is over. Now we will make in a separate video the other questions or full questions of the trading account, balance sheet, PL account, all will be there. So thank you for watching our video. Please share with your friends. We are doing lots of paying for making all these journal entries and all these videos, so for your benefit. So you share it so that I also can benefit out of it. Thank you.